And just to put like a time cap on this, just so everyone knows, I'm hoping that maybe we could talk for like 50 minutes and then bring up questions. So I have like roughly an hour, like I think is the best way to kind of frame this. And I guess like I was reading some of your stuff and I don't want to like misstate your thesis. So maybe we can get into other parts of it, but like maybe it's better if I just state my thesis and we could see where we agree and where we disagree. So I guess the first part of mine is at this moment in time, as APE has hit a new all-time low, I think it is not a smart investment to be buying it at this level. And I also think that people with followings are adding to the hopium toxic culture by like saying that they're doing it without putting out their thesis.
I suppose that's fair. I'll put it this way: Ape is at all-time lows, and if anything, that's just more of an incentive for me personally to buy it. I'll preface this by saying that I'm not a financial advisor. None of this is financial advice. This is just for entertainment purposes only, just to absolve myself of liability there. But that being said, I've purchased about $100,000, well, way more than that, but in one shot, I purchased about $100,000 worth of AMC and Ape when Ape was like around $4 and change, $5 and change. And I've nearly doubled down on it so far. I bought a couple thousand shares this week at around $1.12. I bought a few hundred more today at 93 cents before we got to the end of the day. And then in addition, the price hit a low of around 90 cents, and we're currently seeing a price of around 98 cents, where it went up, around 8% or so after hours to about $1.03, went back down to 98 cents. The thesis is this: the fact of the matter is that according to AMC's documents and statements that were released, their official documentation that were released when Adam Aron issued the Ape AMC preferred equity dividend, APE, AMC has the right to recall the shares of Ape at a one-to-one basis into AMC at any time. He can do it today, he can do it tomorrow, he can do it at midnight, he can do it at any time. In addition, if there is any sort of merger, acquisition, buyout, whatsoever, then those shares would also be recalled. Either one of these would lead to a forcing of shorts to try to flee into the exits at the same exact time. And that is 100%, in my opinion, in the beginnings of a short squeeze, the likes of which people have never seen before. On the day of issuance alone, there was over 43 million failures to deliver of the Ape dividend by market makers, as they could not get their hands on sufficient Ape shares to deliver to retail. There has been this massive campaign to get people to sell out of it for a variety of reasons. The first and foremost being that anytime a dividend of this caliber comes out, there is a requirement for, well, not a requirement, but it is what's the word I'm looking for? It's basically a stipulation that for every one share short of AMC, share that is shorted of AMC, the shorts are then also short one share of Ape. And that's the same case for any dividend. That being said, by this quote unquote checkmate of Adam Aron, he did an absolute phenomenal move and literally doubled the short positions of AMC shorts to include one short on AMC and one short of Ape. And this was verified by Fidelity Investments in various tweets and letters and replies to retail investors when they've requested more information. So that being said, I think it's the cheaper that I can get my hands on this, the more shares that I can acquire. It acts as a hedge to me and to all of my call contracts on AMC1 and AMC, because AMC1 call contracts are indicative of the underlying asset, of which being 100 shares of Ape and 100 shares of AMC for a total of 200 shares. Therefore, it makes a fantastic hedge because even if some of my contracts expire before I get to capitalize on the gamma or on the delta increasing in these options contracts, at the very least, no matter what, I'll be hedged with thousands and thousands of shares of APE. So whether the shorts have to start buying APE back or there's some sort of a merger or acquisition of any kind, when that occurs, or if Adam Aaron even chooses to recall those shares of APE back into AMC, say again tomorrow or next year or whenever he feels like it, the shorts would be forced to cover their shorts on APE. Does that make sense?
Okay, yeah, I was just I was taking notes just so I can hit on the various things that you spoke about.
Yeah,
Maybe
no
going
problem.
forward, it's better to do like a piece at a time because I just don't want to miss anything. Okay, so the first thing I have that I have confusion about is you're talking about Adam Aaron recalling APE. According to the SEC filings, the leadership team at AMC can make it a proposal to merge APE back into AMC. That's what they have the ability to do, but shareholders would have to vote on it. It is not in the leadership team's power to force the merge. They can make a proposal, it's up to them, but then we would have to accept it. The majority of shareholders would have to accept it.
As a matter of fact, according to those SEC filings, Adam Aaron has the ability to do so at any time. What he would be required to do would be to, so that wouldn't be, it would be the board of directors, not necessarily just Adam Aaron. I'm
Yeah, the leadership.
paraphrasing there. Right. I'm paraphrasing there. But yeah, the board of directors could vote to, recall may not even be the right word, but basically, yeah, I guess it is the correct word there, to recall the shares of APE back into AMC at any time. They do not need any sort of approval from shareholders. What they would need approval from is what they would need approval from is we can pull it up, but I'm just let me finish.
Yeah, no.
They would need approval for issuing more. In order to issue more shares of APE, aside from the billion that they've already had.
Oh wait, more than $1 billion. Well, are you talking about
Correct.
authorized or unauthorized? That's a little bit of a gray. If we're talking about authorized versus unauthorized, they can dilute APE without. They can additionally dilute APE without shareholder approval, but to merge APE back into AMC, they need shareholder approval. They have to make it a proposal for all of us. That is in the SEC filings.
Let's go ahead and pull it up. But as a matter of fact, I'm pretty sure you've got those two mixed up. Regardless, even if that's the case, I think that enough people are smart enough to know by now that if you can buy APE at 97 cents or 98 cents per, and you already had a bunch of APE from when it was the stock dividend split first occurred, should I say the dividend disbursement distribution date. On the dividend distribution date, obviously the shares of AMC became one share of AMC and one share of APE. And if people were smart, they'd be more than willing to convert their one share of APE that they bought for 98 cents back into a share of AMC that's worth $7 a piece or $8 a piece or whatever the current value is. So therefore, I can see no reason why retail would choose not to vote for that, even if that were the case.
Well, there's a couple things to unpack there, but I think first we need to establish the fact that he cannot do it. It is up to shareholders to put APE back into AMC.
All right. Well, let's just say theoretically, if that's the case, and he comes out and he tells everybody.
The case.
All right, let's go with it. Let's go with it. I'm just going to pretend like that's the case.
All right.
He puts it out to a vote, and retail is told, okay, do you guys want the shares of APE to go back into AMC on a 1-to-1 basis? Yeah, I can buy them up for 98 cents right now, and then they'd be worth $7 or $8 each. Why wouldn't I do that?
Okay, let's say you have a company that is worth $10 and there's 10 shares. So every single share is worth $1 because there's 10 shares. The company in total is worth 10. If you merge another company back in and you double the shares from 10 to 20, they don't all hold the value of one. AMC is going to retain the same market cap. Like you're saying that if all of a sudden the things that trading at $1 and they all jump up to the current par value of AMC, you're literally almost doubling the market cap of AMC. That wouldn't happen. It would literally be dilution. You're
Even
doubling the
still,
shares.
if they did, the price would have to go up by the same equivalence. It wouldn't go up by 98 cents. It would go up on a one-to-one basis. So even if you say theoretically
no,
the
they
price,
would meet in the middle. If I have
yeah,
10
that's what I
shares
mean.
and they,
So if it went
so
up by $3.50 each share, then all of a sudden your 98-cent shares would be worth $3.50. How is that not a
okay,
good thing?
what about all the people who own AMC at 7? Why would they ever vote yes on that?
Because if they were smart, they purchased AMC and then also received the APE on the dividend split.
What do you mean if they're smart? Right now, the people who are just in AMC are doing better than APE. People that have like said, "Oh, I'm selling all of my APE as soon as I get it, and I'm buying AMC." They are better off. They've lost less money. Why would they ever vote yes to lose now potentially up to 50% more?
Oh, I didn't get into this to sell my AMC. I haven't sold any of my AMC or to sell my APE because APE is part of AMC. They're held in a derivatives basket called AMC1. So as a matter of fact, you're incorrect because people that hold AMC and APE hold a derivative basket called AMC1, which is the combined value of AMC and APE.
AMC1, you're talking about an options thing.
Are you kidding me? I'm not trying to be like brass with you here, but you don't know what AMC1 is? It's the derivatives basket that holds both AMC and APE within it.
The options
It's not an option. It's a derivatives basket.
The derivatives basket, as in AMC1, like the non-standard options contracts that were like mutated before and like thus after the debut of APE. Is that what you're talking about?
AMC1 is a derivatives basket that holds shares of AMC and APE because the true value of AMC is not just in AMC shares. The true value of AMC is in both AMC and APE shares. Therefore, you hold AMC1.
The company as a whole is represented by AMC plus APE. Both AMC and APE have the same legal and financial claim to the company. If you look at the entire market cap of like, if someone wanted to come in and buy AMC, yes, they would have to look at AMC. They would have to look at APE. But what are you talking about with AMC1, this derivatives basket? Like, what are you trying to say?
AMC1 is the derivatives basket that holds both AMC and APE. Right?
Okay.
Why would I go out and buy contracts on AMC for the same price when I can go out and buy AMC1, the adjusted contracts, if you want to call them, on Fidelity, or they're called AMC1 on Schwab and many other brokers?
So you're literally talking about options. That's like what I just said to you. You're talking about the non-standard
It's not
options.
an options. It is. There are options on AMC1, just like there are on AMC, but it's not an option. It's a derivatives basket, right? So these are two different things. It's the combined value of both. The thing is, just so you can buy options on AMC, that's still a share, right? AMC is not an option. You can buy options of AMC, or you could buy options of AMC1, that same derivatives basket, which is AMC plus APE. That's where the true value lies.
I think we're saying the exact same thing. You're saying you can buy the non-standard options.
Correct.
We're getting off the point. This doesn't matter right now. So
it actually does matter because that's actually directly to my point. You said how people that sold their APE shares and bought AMC are much better off. Not really, because AMC also went down in value.
Yeah, but it didn't go down 80%. Right now, it's down 30. There was from the date of debut, people who, if you could have just been in AMC or just been in APE, it was better to be just in AMC.
In hindsight, anything is easy to say, okay, well, I would have lost more or made more like this or like that. But at the end of the day, I'm not willing to give up my shares of APE so that I could buy more AMC. Okay, if something happens here on these, on this with the shorts, like, right, if the shorts get squeezed, APE will run first in that sense. If there's a merger or a buyout or a recall of the shares.
There's no way you can know that. There's no way you can guarantee that APE's going to run first.
Nobody can make any guarantees. But if
then why did
there is a merger, because it will, right? Like, again, I'm not going to make a guarantee on something because it's not, I don't own the stock market, right? So I can't make a guarantee. But if there is a merger, an acquisition, or a recall of APE, the shorts have to get out of APE and back into AMC, for example, if that's what they want to do. So they would
No,
have to be
that's
forced to
not.
close their position.
They,
Yes,
why would they?
they would be forced to close their positions on APE if there was a merger, recall, or acquisition.
You
They
just
would
said that they would have
100%
to
be forced.
go into AMC. Why would they have
If
to
they
go into
want to
AMC?
maintain AMC, if they want to maintain the price of AMC low, they would have to close their positions of APE because the merger and buyout would be delisting the APE shares in order to merge them with AMC or with whatever acquiring company. As a matter of fact, AMC doesn't even have to be bought out. AMC can buy out their own subsidiary, like Odeon Group, for example. And if they buy out Odeon Group, and it could be merged with APE, and then all of a sudden, shorts would have to cover on APE. And in order to suppress the price of AMC, they would have to take out shorts on AMC. That's the thesis.
I think you're saying things that like don't really connect here. Let's go back to your first, like your breakdown of your thesis. The first thing I had issue with was when you said Adam Aaron could recall APE. He cannot recall APE and push it into AMC. I'm looking at the SEC filing right now. It's on investor.amctheaters.com. It's under an FAQ. I think it was posted sometime in August, but someone might want to make sure, like check the filing date for me. But no, it goes to a shareholder vote.
Okay, let's put it this way. If I'm staying on that point, if Adam Aaron or the board of directors so choose, they can create a buyout of Odeon Group or a subsidiary and merge Odeon Group with AMC, and all of a sudden there would be a forced share recall of APE.
What? Yeah, I think.
Yeah.
What
That's the way. If the board of
track.
directors, it does. You're just not understanding me. If
Wait,
Adam
no,
Aaron does a merger, read the
just
SEC
1 second.
there, the filing.
So
Okay, go ahead.
you have some sort of thesis that you think if they acquire a subsidiary of another company, and
It doesn't even have to be another company. It could be their own company that they own.
Well, if
there's a merger,
company, it's in their market.
It's a subsidiary. No, this is not the case. They don't. The market cap of Odeon is not the same as AMC.
You're saying if they buy it and
now they don't even have to. They already own it as a subsidiary. If they merge, if AMC decides to merge with Odeon or any other company, it could be any company whatsoever. If AMC gets bought out, if AMC decides to merge with Odeon, anything, then all of the APE shares would be recalled, forcing a short squeeze on APE.
Why would it be recalled?
Because the shares would have to be removed from the market. It's in the 8K, that one that you just mentioned on investor.amc.com. That it's literally in there.
Line of if they decide to merge Odeon.
Hang on a second. Let me pull that up. I'm going off the top of my head. I don't even have to pull that up to know what I'm talking about. Hang on a second. Let me go to it.
I mean, you have to admit it's a little weird that you didn't even know that like Adam Aaron couldn't do this himself. And
I don't think it's weird at all. It's not weird at all. You know what I mean? He doesn't have to. He can do it himself. But here, let's pull it up here from AMC Investor Relations.
He can't. Like, you're literally just saying random things.
Random things, huh? Okay, hang on. Here's the APE dividend info, and then I can quote it to you directly.
Can you just tell everyone that if you know the date, just so other people can say this, like, do you see the date on your 8K filing?
Like I said, I'm going off the top of my head. I don't need the 8K, but I'm pulling it up here so I can show it to you, so I can read it out for you word for word.
Okay. Yeah, and I'm saying, can you just tell people the date so they can also read it?
The date?
The date of the 8K, because that's the easiest way to find it on the website.
Oh, it's 8/31. It's the top one. It's the FAQ is the very first one, Form 8937.
Wait, you said August? I'm sorry, like I think my
8/31. 8/31.
Okay.
Right, and so that says, what is an AMC preferred equity unit? Each AMC preferred equity unit, APE, is designed to have the same economic value as a share of Class A common stock, right? Yep. First and foremost. Is it convertible into common stock? Technically, yes. The AMC preferred equity units can convert into common stock, but only if the AMC board proposes and then investors vote. So there you go. You're correct on that. To approve an increase in the number of authorized shares of common stock in an amount at least sufficient to permit the conversion of the AMC preferred equity units. However, we do not currently expect the AMC board to make a proposal anytime soon, and that was on 8/31. It is more likely than not the two securities, common stock and the APE units, will trade as two separate securities for quite some time to come. All right, and it all said is to receive the dividend, you must own own both, right? It's not a cash dividend, and AMC preferred equity units do have voting rights. Okay.
Okay. So what about that makes you think I'm wrong?
All right. Theoretically, over the lifetime of the security, the maximum number of APE units that could be authorized over time is up to 5 billion. AMC board has the equivalent of 1 billion of these APE units that can be issued now. So far, they've only issued 516 million, and they've still got 400 plus million in their back pocket to issue at any time. All right.
Mm-hmm.
It says here, unauthorized but unissued APE units can be issued in the future in the same way that AMC can issue authorized but unissued shares of common stock. Normal regulations and requirements with respect to issuance, supply, etc. So it says, when will AMC issue or sell? You know, they don't tell you exactly when, right? Because then that would defeat the whole purpose.
Okay. So the statement I put forward was that shareholders would have to vote. I don't think a majority would vote yes, because people who own AMC, it would be detrimental to them. Your point was that Adam Aaron could do it himself. You just read it from the SEC that he can. The other thing you said was that they could merge another one of their assets into APE, and that would force a recall. What are you talking about there? I'm not seeing it. I have the SEC. Like, what are these? What are you talking about? A forced recall here?
All right. That's going to be on a different filing for you.
Okay, I will let you bring that up. And then in the meantime, there was another thing I wanted to talk about that we've been talking a little bit here, of this concept of a buyout, and what would that do? What would that not do? And,
it wouldn't bring them back with APE. They wouldn't merge it with APE. They would if they merge anything with AMC, or if there's any buyout of AMC whatsoever. The documents, the AK filing states that if that were to occur, all of the shares of APE would be recalled. Does that make sense? And if they're recalled, because they would be merging with another company, there would be an absolute short squeeze. There's no way around it.
What are you're just saying random words that don't connect here and have no financial bearing. Don't laugh like that though, because I think we need to get actual information out there. And
well, it is actual information. You're just trying to gaslight me by saying that I'm saying random words. These are not random words. This is a fact.
The first part of this discussion that we've already had a disagreement with, I've been right. So let's
correct. That's great. I gave you that one. Okay. Either way, the point of the fact of the matter is,
let's get to the bottom of the second one.
People that own AMC also own APE. So why would they vote not to? Because very few people, such as yourself, sold their APE because they thought it would be a good idea. The fact of the matter is, if any buyout occurs, if any merger occurs, APE would then be recalled into AMC again. Does that make sense?
APE would be recalled into AMC? No, I don't agree with that.
Okay, that's fine. We can agree to disagree.
If a company comes in, every single acquisition I've ever heard of, they're saying, okay, we agree this is the value of the company, and that's what it ends up trading up to. So they're going to look at the total amount of shares between AMC and APE. It's going to be divvied up accordingly. And it goes to that value. So the shorts also, they have to ride it back up to whatever the acquisition value is, but it's going to be trading at that value. You just divide the new market cap from the acquisition.
That's not the way that it works with a dividend like this. This is not a standard stock split. This is a dividend, a preferred equity dividend.
It doesn't matter, because right now they have the same financial and legal claim to the company. So I know there's a slight dilution, but let's just say there wasn't. And for the ease of math, let's just say there was 500 AMC. Let's just say there is now 500 APE. I know that's not technically right, but just for the point of math, all they did was saying with an acquisition, we now have to dilute it over 1 billion shares instead of 500 million. That's what happens when you buy out a company. It's a big stack of cash, and you divide it among how many shares there are.
According to the AK, if there's any buyout of AMC or merger or recall, that would immediately bring the stocks back together. It would put them back together instead of them being two separate ones.
Where are you reading this? Because I've never heard of this.
I did a whole video about it. So hang on a second. This is a long ass document. It's a long ass document. So hang on while I get to it.
Okay. I'll let you do that. Another thing that I'm confused about, and in my notes here, you said you were willing to buy more APE as a hedge against your options. That is literally a hedge I've never heard of. Hedges are in the opposite direction. If you are long on derivatives and long on stock, that's not a hedge.
I disagree with you because AMC1 is the derivative, AMC is the stock, and APE is the dividend.
If you're long on all of those, that's no hedge.
I disagree with you. I think it's a great hedge because if a call contract expires, you still get to keep your shares. So it's a great hedge.
No, that's just you being more long. That's not a hedge.
That's true. That's true. I don't need to go short to hedge. That's not the way that it works.
That's what a hedge is. A hedge is if you own stock, like a covered call is a hedge. You own Apple, but you're worried about it in the short term, so you hedge it with a put. Or you have a bunch of calls and you're like, I don't know about this, so you also short the stock. Hedges, like literally a hedge is the opposite direction. If you own this derivatives basket, which like you love that term, but really it's just an option. It's a non-standard option.
It's not. It's a derivatives basket.
It's a non-standard option. But regardless, it doesn't matter. We don't have to agree on that terminology, but that's not a hedge. Like that's not, if you are all long, if you are fully bullish on everything that is related to AMC as a company, what's the hedge?
The hedge is on the contracts against the contracts expiring. Shares and dividends don't expire. So if you have contracts and shares of AMC and APE as a hedge for those expiring, yes, it is. To protect a hedge is to protect yourself from losses. So if you have losses on call contracts, but you maintain more shares, that is hedging for the call contracts losing value, because then you don't have to worry about the theta decay. So it's literally a hedge. You're just defining it as a short position against the long. It doesn't have to be like that.
You don't hedge a call by buying shares. That's never a hedge that's ever been written about, done, because it's not a hedge.
You don't have to think it is. That's fine. But as a matter of fact, what happens when your call contracts expire? They're worthless, right?
If they're out of the money, I suppose.
Right. And so if you have more shares and you're bullish on the stock going up in price in the future, then it would be a hedge against losing that money, wouldn't it? It would protect you from, yes, it would.
No.
Yes, it would. A hedge doesn't have to be the opposite position of what you're holding.
Okay. Maybe a better way I could explain this is, do you agree that on anything, you're either long, short, or neutral? Like those are the three options.
Oh, absolutely.
Okay, so those are the three things right there. You are either long, short, or neutral. If I own AMC stock and I own AMC options, how is that a hedge? It's just another form of being long. It's just one is in the equity and the other is in a derivatives contract. You're not hedged.
Correct.
If you hedge, you go back towards neutral.
Yeah, exactly. And so if your options expire worthless and you lose that money, then you are still long on the shares. That means when your shares go up in value, whether it be either AMC or APE, then you're hedging against those losses on the contracts to get neutral.
That's not a hedge, but that's also not the point of this conversation. But that is very much not what the hedge means in the world of Wall Street.
All right. Anyways, as you were saying, the whole point of APE there is as a dividend, right? And at the current value, it is extremely undervalued because it's supposed to be at the equivalent value of AMC. So if it's not, that's just better for us in order to buy it, as far as my opinion. Why would I spend $7.50 to buy more shares of AMC when I could spend 98 cents to buy more shares of APE?
Well, typically you buy the thing that you think is going to perform better. And ever since the debut of APE on August, 22nd, APE is down 80% and AMC is down, I don't know, roughly 25. APE is the one being actively diluted.
Exactly. So when the price goes up, or if there's any sort of merger or shorts closing, that would cause APE to go up, which would by turn cause AMC1 derivatives basket to go up, which would also cause AMC to go up.
Hey, we're not talking about the derivatives basket because
because you can't have APE without AMC1.
Yes, you can because it's a derivative. Derivatives are based off of assets. It's an underlying, like the underlying asset of AMC1 is APE and AMC. It is very much
Exactly.
possible. So of course you could have it without AMC1. The derivative is based off the underlying thing. Do you know what, like, give me the definition of a derivative.
Listen, this bet, a derivative is just a bad bet. It's a gamble. Okay. However, you can't have AMC1 without APE and AMC. So for you to only have AMC, it's like cutting your legs off. And you can think that because it's down 80%, it's not a good reason to buy. If anything, it's the contrary. Because it's down more, it's going to have a higher percentage gain, which would increase your gains when they do run.
What
If
kind of
AMC
logic
runs,
is that? Okay,
it's
FTT
perfectly sound
token.
logic.
FTT token is down 99%. Are you buying?
FTT is completely different. FTT is a fucking nearly bankrupt company. It's not they are bankrupt. They filed 134 bankruptcies.
My point
That's
is
that's
just
a
because
really
something's
stupid thing to say, to be honest with you.
no, it's stupid for you to say that just because something down 80%, it's worthwhile to buy. That's
That's
not
not stupid.
true.
I didn't say just because. I said that is one of many reasons.
You said
One
it's
of
down
many reasons.
80%. To the contrary, it's worthwhile to buy.
Because it's down more than AMC, when shorts cover, it will have a higher percentage gain.
Okay, what if 8 doesn't recover?
That's impossible.
You're making guarantees about a stock.
I'm not making any guarantees. Don't put words in my mouth.
Impossible.
Yeah,
You
that's
just said it's
impossible.
impossible.
That's my opinion. It's impossible. If AMC runs, they're both held in the AMC1 derivatives basket. If AMC runs, AMC1 will go up in value. If AMC1 goes up in value,
Let's stop
let me
talking
finish.
about options. Let's just
No,
stop
we
talking
have
about
to.
options.
We can't do that because they are interlinked. They are intertwined at the hip. Okay. If AMC goes up, AMC1 will go up. Therefore, APE will go up. If APE goes up, AMC1 will go up. Therefore, AMC will go up. You can't have one without the other.
Well, of course you can, because even today, AMC outperformed APE. By your logic, they should always,
so let's use that logic.
Be performing the exact same. Of course you can have one. The derivative is not the thing that leads the battle. It's the underlying asset.
Exactly. So if AMC goes to $150 tomorrow, what do you think is going to happen to AMC1 contracts?
They're going to go up.
Exactly. And what's held in AMC1 contracts?
No, it's not what's held
in
it. It's what its value is.
What's the underlying asset? No, you're proving my point.
Wait,
what's the underlying asset of AMC1?
Underlying?
It's
based on the underlying. They don't hold the underlying.
Exactly. It's based off the underlying. So if I have AMC1 contracts and AMC goes to $150 a share, and let's say my contracts are 145s, all of a sudden my 145 AMC1s are going to be worth a lot more money because I can then exercise them. I can sell some, I can exercise them, and get 100 shares of AMC and 100 shares of APE. Those are the underlying. Therefore,
that doesn't mean the other underlying goes up. There's no rule that it has to do that.
There's no rule, but that's the way the market mechanics work. If AMC1 contracts are exercised, it's going to cause gamma and FOMO and shorts to have to cover or close their positions in order to exercise and give you those shares, 100 shares of APE and 100 shares of AMC. Therefore, as a byproduct, it's not a rule, it's a byproduct. APE will go up.
I'm looking at AMC1 options right now. They're not even that liquid. Like, even if this plays out, and I don't believe in your theory at all, these aren't even popular contracts. In fact,
you're right. And that's what makes them even more bullish. That's what makes them even better. The fact that most people don't know what the fuck they are, the fact that broker dealers are hiding them from people makes it even more bullish on AMC1.
No, most brokers don't even offer it because most brokers don't want to deal with non-standard contracts.
I can buy them on Fidelity and Schwab and Webull right now. And they're like three of the top brokers in the world.
Webull definitely isn't. And why are you still using Webull?
I'm not. I'm just using them as an example. So don't try to be like, oh, why are you doing this? Why are you doing? I'm using them as an example of many. Webull is one of the top brokers in the world. All you got to do is call them and order them. On Schwab, you can buy them online. They're called AMC1. On Fidelity, they're called adjusted options. On TD Ameritrade, on E-Trade, you can buy them.
Something that's absurdly illiquid, and then as soon as all of the options expire, that were created before August 22nd, this is literally never going to be a thing. Like as
There's
soon as
145,000 open interest on one strike. That's illiquid? That's not illiquid, my friend. That's very liquid.
relative to AMC and Ape individually, yes, it is. And they're all going to like Thanos snap like to non-existence as soon as all the pre-August 18th ones disappear. Like as soon as those all expire, AMC one's done. And you still
You can buy
seem to
AMC 1 contracts for January 2024 right now.
they're going to get more and more illiquid because why would people want non-standard options?
Man, when these things first came out, let's see, for example, the January 2023, those 145 strike for AMC 1, there was 102,000 available, 102,000 open interest. As of now, there's 145,000 open interest on just that one strike. So how are you going to tell me that open interest going up by 43,000
What are you talking
is going to
about? They
be
don't come
reducing the
out, they were
liquidity?
transformed.
Exactly. And now people are buying them. That's why now it's up increased by 43,000 open interest on just one strike price of AMC 1.
Didn't you just say it came down, the open interest?
No, I said it went up from 102 to 145 or 146,000 since the issuance.
If your
That's an increase of 43,000 open interest on AMC 1.
If your thesis to buy Ape in equity is because of a derivative, you're literally looking at it backwards. Derivatives are based on an underlying asset. If you are starting with a derivative, your point is moot, and anyone who knows about the market is just not going to like think anything of this because derivatives are based on something else.
Hey, Matt, how long have you been trading?
A decade.
A decade? Great. Okay, I've been trading 20 years. How old are you, Matt?
I'm 28.
28. So you've been trading since you were 18, so have I. And I'm 37. All right. Anytime that there's a derivative basket here, and one of the assets goes up, the derivatives go up.
Well,
and when the derivatives go up, it pulls up the assets with it.
No,
so how can you say that that's not
Everything...
the case? Yes, it does.
No, derivatives don't pull up an asset. The fact that we're here to talk about the like reasonable nature of buying Ape, and you think derivatives pull up the underlying asset, you have not been trading for 2 decades.
You are putting words in my mouth. AMC would cause the derivative to go up, which because of AMC going up, it would cause Ape to go up, and vice versa. If Ape goes up, or if there's a merger or a buyout, then AMC 1 and AMC would both go up as well.
AMC 1 would go up. Why would AMC going up make Ape go up? If your thesis was right, we wouldn't see what we literally saw today. AMC over the past month has gone up without Ape going up.
Correct.
So how is your thesis
That's fine.
right then?
Because there has been no squeeze on them. There has been no fucking squeeze yet.
You're saying they're only going to behave the same if there's also a squeeze.
When they get to a certain level, they will all go up together. Absolutely.
Absolutely. Impossible. You're making these non-gray area statements. It's not based on anything. Dude, like you can't just randomly say this.
I'm not randomly saying it. That's the way that things work. Okay. If your Ape goes up in value a lot, right, then there will have to be some sort of a way for this to be hedged. Okay. For them to hedge against losing money on that, or for them to protect themselves on that.
Well,
okay.
And if we're having of hedge or my definition of hedge,
we can use your definition, right?
All right,
so
sure.
if Ape goes up a lot in value.
Okay.
As a byproduct, the value of the AMC 1 will go up as well.
Okay.
And when people exercise shares, that causes gamma. And when gamma occurs, the underlying assets of the derivatives that you're receiving, which would be 200 shares, 100 Ape and 100 AMC, would cause Ape and AMC to go up, period.
No, gamma happens as people, you don't have to exercise to cause gamma.
You don't have to, but it's one of many ways, is all I'm trying to say.
No, it isn't. Gamma is when you have so options market making is a single dealer market. If you and I were to trade stock, there's a chance that we could trade against each other. There's a chance we could trade against hedge funds, banks, like whatever. When you trade options, it's a single dealer market. You are only dealing with options buyers or sellers. You're dealing with an options market maker. If everyone is like going full on tilt into calls, that means a market maker is selling a bunch of people calls. There's literally nothing else happening there. And all as it starts to go up, they look at their book and they have to hedge it. And all of a sudden, as it keeps going, they have to buy more and more and more as more people are YOLOing into calls. That's the gamma. You don't have to exercise, it's them balancing out their book.
I'm going to completely disagree with you there. Okay.
I mean,
Short sellers are
with these
responsible for
people.
paying the APE unit to lenders. You've talked with these people. That's great. That's great. I'm glad to hear that. Okay. That's not what I asked you here, right? The
What did you
original
sorry, what
owner
you
of a
ask
share
question?
retains the rights to the dividends. Okay. And what you're missing here is that APE is not going to directly cause AMC to go up. It's going to indirectly cause AMC to go up, just like the APE's going to indirectly cause the value of AMC1 to go up because they're the underlying asset.
It would directly cause AMC1 to go up, but I mean, indirect, I don't know. Like, you're guaranteeing things. It could happen, but like to say it with such a matter of fact attitude, it's just not necessarily right. And the stock performance is the example that even though AMC and APE have the same financial and legal claim to the company, they're clearly being treated differently. So you don't see how it's dangerous in adding into the hopium and copium of this particular community to be like, oh, okay, as soon as one goes, the other has to go.
That's not the way that it works. I never said that as soon as one goes, the other one has to go. Okay, that's not the way that it works.
So you think one can independently squeeze without the other?
Independently, yes, but in the long run, they will squeeze together. They will squeeze together.
Right. I agree with the first part of saying one can independently move without the other. I don't agree that if one squeezes, the other one eventually has to squeeze. Like, why? Tell me, explain that to me.
Explain what? Say that one more time for me. What do you want to explain?
If one squeezes, why the other has to squeeze?
If APE squeezes, for example, it would cause that derivatives basket that you mentioned, AMC1, to go up in value.
Yep.
As people sell and make profit and then exercise those AMC1 contracts, it will cause the value of both APE and AMC to go up because there would be gamma and delta hedging and FOMO buying on both. Because brokers would have to deliver AMC and APE, and they would have to go out and fetch them. In the words of Thomas Peterfy, they would have to fetch the shares at whatever price.
I mean, I agree with the FOMO part of it, but I still think it's incredibly dangerous to think that if like one's doing, but it's also, even with that, I mean, I guess that's maybe like part 2 of our discussion, like, cause I think we're getting off base here of, my thesis stated to you was, I think it is extraordinarily dangerous, for people to be saying this is a good time to buy APE as it's being diluted. And I think my reason for people doing it is because they don't have an actual thesis. I think they are farming likes, views, hopium, and positive engagement from the community. My reasoning of APE, of why I think it is a poor buy right now, is because it has fallen over 80%. So right away, we're talking about catching a falling knife. There's been no signs of a technical reversion. We know they've completed 3.5% of the dilution, which has raised them $36 million. And on the higher interest rate environment that we're in, that's literally only good for 2 weeks of interest payments. They have cratered this thing 80% to give them 2 more weeks of interest payment runway. And all they're going to do, the average selling of all of this was at $2.44. It is now trading at $1, which means they would have to sell more than 2.5x what they did to just get them another 2 weeks of interest payments. That, from a fundamental perspective, is a disaster. If you like it or not, the people who move the markets are big players, and big players are not retarded. If I can look at these numbers, they can look at these numbers. Why would anyone be buying right here?
You're looking at it all wrong. All right. And the fact of the matter is here that APE dividend distribution is not a dilution of AMC shareholders. No shareholder will have a reduced percentage of ownership due to this APE dividend. They still have the same exact percentage as they did prior.
That's just false. This is dilution.
It's not false. It's not false at all.
APE is dilution.
The APE dividend distribution is not dilution.
What are you talking about? There's more shares and the price dropped to equal the same market cap. That's the definition of dilution.
All right, I disagree. Let's see here.
Wait, no,
It
no,
says here on the,
this,
let me read the SEC filing for you.
okay,
Right?
do it.
The company expects that APE will serve as a currency to raise additional equity capital to strengthen its balance sheet, including debt repayments, and provide capital for opportunistic and value-enhancing and transformative acquisition or investments. Any dilution caused by future sales of APE could adversely affect the market price of AMC preferred equity units and the common stock, not just APE. It could dilute both. So for you to say that selling APE and getting AMC is safe or safer, that's absolute nonsense, because if they do decide to sell more APE, that would dilute both of them. Okay, but you don't get a reduced percentage. There's no dilution by the APE dividend being issued. You still have the exact same percentage that you did previously. And on a one-to-one,
no, you don't have the same percentage.
Why not?
Okay, do you and I agree that AMC and APE have the same legal and financial claim to the company?
Yes.
Okay, what happens when I go from 500 million to now 1 billion of the things that have the exact same financial and legal claim to the company? I doubled the share
Nothing,
count.
because yeah, but they didn't dilute the market cap. The market cap is still the same as what it was prior. They just doubled the share count. But you still get double the shares. Therefore, it's not dilution.
Wait, you literally just said it. You said the market cap stays the same. They doubled the shares. That's dilution.
Right?
You
also receive double the shares. You got twice as many shares. So even though they doubled the shares available, you received 1 for 1. So now you have twice as many shares. The same amount of AMC and the same amount of APE that you did when you began. So they also doubled the amount of shares in your account. So how are you diluted?
Dude, they doubled the shares and now they're selling more shares. This is literally a basic definition of dilution.
Correct. And what happened the last 2 times? In January and in May of 2021 when AMC sold shares.
Oh, I love that you brought this up because this has been debunked in my own brain as I can't sleep at night a million times. Have you looked at the dates?
Yes,
AMC.
absolutely.
Okay, then you know AMC went down until it was announced that the dilution was over.
AMC's price only shot up because of the dilution.
No, it
because
shot
of
up
the
when the
share sale.
dilution was over. If you look at the announcement of we're diluting, it went down until the dilution was over.
And what is the trading days that it takes for price action to take effect?
Price action to take instantaneously as soon as the report comes out?
No, it's T+2 data. It's T+2 data. When shares are sold or purchased, it's T+2, right?
Yeah, but people are reacting to headlines. You react to the headline that you're getting
Retail doesn't move the stock. I know you find it hard to believe, but retail only owns 20% of all the money in the stock market. The other 80% belongs to institutions. We don't move the stock price.
What does that have to do with anything?
What do you mean? That's everything. Because it's all T+2. If dilution is announced and then the price goes up days later, that's because these shares have to be purchased and sold, which causes the stock price to go up several days later, not the same day that it's announced.
But price action is reflected instantaneously.
No, it's not. It's T+2 data.
When you look at the time and sales, do you think that was from 2 days ago?
What are you talking about? Do I think it's from 2 days ago? No, you said that AMC, when they announced dilution, the price was going down. And then after the dilution, the price went up. That's my point. After the dilution, price goes up.
Yeah, because people are reacting to headlines.
All right, we're going to agree to disagree there. But the matter of fact is, every time they've diluted, the price goes up after the fact.
Every time they've announced that the dilution is over, it's gone up.
It doesn't matter if they announce that it's begun or that it's over. The fact of the matter that they have to
matters because
buy
the announcement makes it go down, and then the announcement that it's completed goes up.
You still believe that retail affects the stock, don't you? Retail doesn't cause the stock price to go up or down.
How much percentage of AMC shares do you think retail owns?
Retail owns 85% of AMC, not including ETFs. 90% including ETFs.
And you think with that metric that we don't move it? And even if we
100%. 100%. Retail does not move the fucking stock. Retail prevents it from cratering to zero but retail does not cause the price of the stock to go up or down. And if you think they do, I think that's absolutely naive.
Well,
This is all high frequency trading, wash sales, rehypothecations, shorts marked as long, all sorts of fucking problems going on here on the stock market.
All right.
To
So
think that we control the price of the stock is not the case.
So if we follow your train of thought, if retail does not have any impact on price.
I never said any impact. I didn't say that. I said we don't move the price.
All right. If we don't move the price, why are you campaigning that people should buy Ape?
Oh, I'm not campaigning. I'm saying that Ape is a great buy for myself. People can do whatever the hell they want. Ape is a great buy because it's down so much already. The fact that is that when Ape squeezes, when AMC squeezes, they will inevitably, even if not at the same exact moment, they will inevitably, in my opinion, move together at some point in time, or they will both continue to go up. They're held in the same derivatives basket for a reason.
Why would it ever squeeze if retail doesn't have an impact?
Because we don't have an impact on January 28th. We didn't have an impact on June 3rd, right? We didn't move the stock price up. That's all delta hedging by broker dealers, market makers, and hedge funds and family offices. It's institutional price action. Institutional price action moves the stock up and down. We don't.
Okay. So you're saying that for you individually, just you, not giving any advice, you think it's good to be buying something that the retail effort has no impact on, and you are now relying on family offices and banks and all of that stuff, people who are informed, to buy something that is down 80% from late August till now, and it's being diluted, and it's not even close to being done. You're expecting people who are like the fancy schmancy pedigree motherfuckers to be putting money into a stock that has $5 billion of debt, is operating at a loss of $179 million. People who are informed, you think are going to come in and buy and save you?
They're not going to come in and buy and save me. They're buying to save their own ass, just like they did on January 28th, 2021, when they had to pull the buy button because they were so fucking over leveraged that broker dealers around the world were about to become insolvent. They're not buying it to save us. They're buying it to save their own asses because they're so fucking over leveraged on shorting these stock for so many years. There are so many synthetics and rehypothecated shares and shorts marked as long that they cannot just let people continue to buy. That when guys like DFV, Deep Fucking Value, Keith Gill, were exercising contracts and these broker dealers had to go out and fetch them at whatever price, they were worried about themselves, not about us. Not about us. They're not here to save us. They're trying to save their own ass, period. They're not going to do it for me. They're going to do it for themselves. That's why there's so many halts on AMC. That's why there's halts every time the price goes up on GameStop and AMC and all these heavily shorted meme stocks.
Listen, I get jacked up when I watch the pump up monologue on Miracle 2. But if we bring it back to actual stats,
Miracle? I don't even know what that is.
It's a hockey movie. It's like the best American hockey movie ever made. You should watch it. But anyway.
Oh, I didn't think we were talking about movies. Okay.
Well, you just got me jacked up. But you're saying that they need to save themselves. I mean,
exactly. That's all they care about. They don't give a shit about us.
And that's fine. What I don't get is, I guess before we had a difference on the definition of hedge, and I think now we have a difference of who's in danger and who needs to be saved.
Okay.
Because I'm looking at AMC and I'm looking at Ape, and to me, from June until now on AMC, and from literally the debut of Ape until now, it feels like that's an interesting definition of saving. It feels like they're up big money.
Okay, let me read something to you. Okay, this is on page 13 of the Ape dividend release from the SEC. Okay, section 567 adjustments states, upon the occurrence of a reorganization event prior to the conversion date, each share of preferred stock outstanding immediately prior to such reorganization event, which means reorganization, which is buyout, right, or merger, and I'll continue reading now, without the consent of holders, automatically convert into the types and amounts of securities, cash, and other property that is or was receivable in such reorganization event by a holder of the number of shares of common stock into which such share of preferred stock was convertible immediately prior to such reorganization event in exchange for such shares of common stock. That literally means, and also it says, the holders shall not have any separate class vote on any reorganization event. A reorganization event shall mean, 1, any consolidation, merger, or conversion of the corporation with or into another person, in each case pursuant to which the common stock will be converted into cash, securities, or other property of the corporation or another person. 2, any sale, transfer, lease, or conveyance to any other person of all or substantially all of the consolidated assets of the corporation and its subsidiaries taken as a whole, in each case pursuant to which the common stock will be converted into cash, securities, or other property. Or 3, any reclassification of the common stock into securities other than the common stock. That means if AMC gets purchased by Disney, theoretically, APE gets recalled. If AMC is sold, transferred, leased, or conveyed, APE gets transferred into the common stock and converted into the securities. If there's any consolidation, merger, or conversion of the corporation with or into another person, which means if AMC merges with their very own subsidiary of Odeon, then I'll read, it says, in each case pursuant to which the common stock will be converted into cash, securities, or other property of the corporation. Therefore, all of those scenarios lead to a recall of shares of APE. And as we already know, for every short on AMC, there is one short on APE. So there would be a massive short squeeze on APE, which would cause the price of the AMC 1 derivatives basket contracts, if you want to call them, these contracts will go up in value massively. That means when people sell them and exercise them, they will receive even more increases in prices. Right, and 100 shares of both, I'm not done, 100 shares of APE and 100 shares of AMC.
You're like making the Simone Biles effort of mental gymnastics here. You can continue it, but I just need to interject like a couple things before I lose my own.
Okay, yeah, fair enough. It's a lot of shit to think about. So go ahead.
I think there's some confusion here of what this means in terms of legal jargon.
There's not. It's clear as day. It's clear as day. I'm looking at it right here.
Yeah,
it's on page 13.
I think you're confusing what it means.
I'm not. I'm not. I've looked at this with the brightest minds. You name it. Casey Shaw, Pantheon AMC, and 100 other apes. We've all gone over this together and separately in multiple discords, on Twitter and everything, and we've all come to the same. And you don't have to be a genius to see, upon the occurrence of a reorganization event, each share of the preferred stock outstanding immediately prior, without the consent of holders, automatically converts into the types and amounts of securities that is or was receivable in such reorganization event. That is clear English.
Yeah, you never said that's not a recall. What you're referring to is if someone comes in and buys it, they're buying it all. As in, like, the AMC equity holders aren't going to get fucked. The APE equity owners aren't going to get fucked because they have the exact same legal and financial claim to the company.
And they would automatically convert into the types and securities that they purchased. They would be converted.
Like, okay, let's say when the money that AMC, in the scenario, if it were to be purchased, it's just distributed among all of the different assets, like all the different shares. That's all it is. As in, like, you're not getting fucked in APE, you're not getting fucked in AMC. They all have the same legal and financial claim. This isn't a recall. And like whatever the price jumps up to based on the decided market cap from the acquisition, I mean, the shorts would obviously have to ride it up to that point and they would get fucked. But like, it's not some weird push back into AMC.
It absolutely is. It's right here. Automatically convert into the types and securities.
Like, someone else is buying it. It's this whole company is someone else's asset.
They don't have any reorganization event. APE could convert into AMC. APE could convert into, and AMC could both convert into Disney. APE and AMC could convert into Odeon or whatever. Odeon could convert in with them. Anytime the reorganization event occurs, and I'm quoting from the SEC filing, they would automatically convert into the types and amounts of securities. And when they convert, that means that the old APE would then be delisted, meaning the conversion would cause all the shorts to close, not cover, close, period.
Okay. I very much disagree with you, but let's say you are right. Let's say on this one, because I don't think we're going to make headway. If that is true, why has the leadership team not done that with Odeon and APE?
Why would they rush to do it? The
Sorry,
more that these
why
stocks
would
go
they
down,
rush?
the more that ape goes down, the more that it's going to shoot up. Because the only reason it's going down, in my humble opinion, is because 80% of it's being run through dark pools. Because the majority of this is short pressure. A lot of total return swaps are being taken out on tokenized securities of AMC and APE that is causing these prices to go down while hiding short interest and hiding failures to deliver. That's a fact.
You're just
That's
saying
a
so
fact.
many things that you're not informed about. Like
I
you're
think
just
you have no idea what you're talking about. You're just over here trying to gaslight me and trying to make people think I don't know what I'm talking about when it's very clear. Okay, FTX and Bittrex had over 1 billion shares of AMC that they never even owned, right? And the same thing with
They were
GameStop.
derivatives. It's on the website. It
Exactly.
says
They
the
were derivatives,
derivatives.
and
We already talked
they
about
can use
derivatives, not
total return swaps on
which
these
is a
derivatives,
derivative. It's a derivative. That is the derivative. The swap is the derivative. That
and
they
that's
didn't
how they're
have the
able to
asset. It's
suppress
on the
the price
website.
of AMC and APE without the asset. They don't need the asset in order to suppress the price with total return swaps. That's what Archegos did. Archegos did that exact same thing until it blew
Yeah,
up in their fucking face.
they had derivatives. They didn't have the asset. And like it's on the website. It's literally on their website that they
I
have
know that.
derivatives. They don't
Like,
have the
I
underlying
understand
asset.
you haven't been looking at my tweets, but I know all this, man. I've been reporting on this for a long time.
If clearly not, because you literally are alluding to you think dark pools don't have an impact on price.
I said they absolutely do. They have a massive impact on price. Don't put words in my mouth here.
Okay, so you
keep doing that, Matt, and it's quite annoying.
You were saying they were
it's
hiding
ridiculous.
What are they hiding in dark pools? And I apologize for putting words in your mouth.
Things aren't hiding in dark pools. Dark pools are used to buy or sell between institutions or from retail to trade at whatever price they want. There is no price action. There is no positive pressure in the same way that running through a lit market or a lit exchange would be. Running things through dark pools massively suppress prices, massively, to a fraction of a penny. That's a fact.
Not true. No,
yes, it is. My friend Dave Lauer told me, as a matter of fact, and we've had this discussion many times with people much more educated than you. Yes, the guy that you interviewed. Yeah, I've talked to him a lot more than just interviewed him. Yeah, let me tell you that much. Dave Lauer specifically has said that the dark pools is a massive, massive price suppression on stocks, and it's unquantifiable because we have no idea. Yes, it is, Matt.
He never said that.
Okay, whatever you say, man. But yeah, we've had a space call, several of them actually, where he said that outright. Payment for order flow and dark pools are an unquantifiable method, a method of price suppression that is unquantifiable, plain and simple. You cannot run things through dark
on price. Yes, you can.
That's nonsense, Matt. It honestly shows me that you really don't know what the hell you're talking about if you think dark pools don't suppress prices.
They don't suppress prices.
Wow, that is ridiculous, my friend. Yeah, dude, you have no idea what you're talking about, man. This is what I do, man. This is what I do. Yes, it is.
It very much isn't. For 2 decades, this is embarrassing. Like, you're arguing about like non-standard options. You've been trading for 2 decades. You don't know what hedging is, and even the dark.
I know exactly what hedging is. I just don't put myself in the same little, like, I don't need the book, which I've gone through all of them, by the way.
No, you haven't.
I don't need the book to tell me that I need to go short in order to hedge myself. I can hedge by going long on shares to protect myself from losses and call contracts. The fact that you don't see that, yes, it is. You just don't. You just choose for it not to be. Yeah, you're right. Going more long is a hedge for expiring contracts. It doesn't take a genius to figure that out.
All right, back to the dark pool thing. There's 4 or 5 interviews on my channel with Dave right now, and that is the straight question. I've clipped the question. Does trading on dark pools have a material impact on price? The answer is yes. Placing orders is a different story. The placement on the bid and the ask side are hidden. But as soon as
you asked a different question. What you just said is different from what I said. A material impact on price is not the same impact as running those orders through a lit exchange. Having a material impact is not the same as having the exact same impact via a lit market. They're 2 completely different things. Is there an impact? Yes. Is it the same? Not even close.
What do you mean the same impact?
All right. You could run 1,000 shares through a dark pool and hold on to them there for days and days, if not weeks, before you have to deliver. On a lit market, that's not the case. On a lit market, the price impact is T+2 data. On a dark pool, it could be held for many, it could is a much greater suppression of price action on dark pools. So that's why it's called a dark pool, not a lit market, because you can't see the price of those shares being traded.
What are you talking about? They're still in the NBBO.
You can't tell me that you can go in and see how many trades were how much and what price a dark pool traded shares at, because that's the whole definition and the point of a dark pool.
What are you talking about? They all hit the tape. Every trade hits the tape.
Correct. And the positive or negative price action of shares run through a dark pool is not the same or equivalent of that run through a lit market. Not at all.
You literally just said right after trying to tell me that you can't see the shares or the price things are traded at on a dark pool.
You can't see the price of all the shares traded on the dark pool. And
yes,
when you can see the price, when you can 100%. See the price, it does not provide the exact same price action as it would running it through a lit market.
Dude, what? Like, you're just changing your argument as soon as I tell you.
No, I'm not.
Like, no, I didn't say that. Okay. What you tell me what's hidden on a dark pool?
That's not the way that it works, Matt.
Okay, how about this?
Tell you what's hidden on a dark pool. The price action. The price action is not identical on a dark pool as it would be on lit markets. That's why dark pools are used. That's the whole reason for them to have dark pools. So they can trade as large amounts, vast quantities of shares without having to go through a lit market, without having to impact the price pressure, because they don't have to have the shares available in a dark pool the way that they have to have them on a lit market, on a lit exchange. That's why if you run an order, if you have to run an order through IEX.
Oh my God, I guarantee you, if you cut this part of our thing out and you play it back for Dave, go to his DMs, you will be sorely mistaken. Like, what a dark pool is for is when a big player comes in, they don't want to show their intent. They don't want to show a massive buy, sitting order buy. They don't want to show a massive sitting order
exactly, sell. Thus suppressing the price action.
No, that's not price action. I'm saying the trade hasn't gone through. No one has hit the bid or the ask. As soon as it's hit, as soon as someone gobbles a little bit at the bid or the ask, that hits the time and sales.
But the percentage or even the dollar amount, let's say the penny change there is not the same. It would be a fraction of a penny. The shares traded in a dark pool are only a fraction of the price action that would occur on those same exact number of shares on a lit market, period.
And it just depends on who's buying and who's selling. If they do it on a lit market, it's the same argument, but it's all within the NBBO.
It's completely different. Dude, it's completely different.
Like Lou versus Wall Street with like a second secret book of prices. We're all in the NBBO. Nothing on the exchange would go higher if there's still a big whale.
You sound like a really uneducated person right now. To be calling me, to be comparing me to Lou, or for whatever reason here, sounds like a very childish way of not being able to get your point across. The fact of the matter is that dark pools suppress pricing. And for you to say otherwise shows me that you completely lack the knowledge and understanding. Price action. Price action. The price action is not the same on a dark pool as it is on a lit market. That's why all these are traded on dark pools.
There's different participants. Like you might be trading like whatever routed to Citadel. I might be on the New York Stock Exchange. Someone might be on IEX. But if you're saying that stocks go up less and down less when actively trading on dark pools, you are wrong. They all have the same equivalent impact on price.
That's absolutely incorrect. That's a downright lie, or you're too ignorant to understand that fact. Dark pools are massive price suppression. That's why they're such a big problem. That's why people have been pushing to order through lit markets, to order through IEX, because dark pools are the worst thing to happen to retail, second to payment for order flow.
But you
just the worst fucking thing to happen to retail.
Retail doesn't impact price, so we're only talking about the big guys.
We don't. They're institutional. The institutions that are running things through dark pools, not you or I. We don't have access to the dark pools. But when we trade through, these guys, these Citadel or Box or any of these other, these things are run through dark pools. We don't. If you're not running them directly to IEX or other lit markets, they're going into dark pools and alternative trading systems. And these alternative trading systems are suppressing price action. They can be held there for a long time. A long time.
Can be held there. It hits.
Do you not know the way that do you not know the way that a dark pool works? Apparently not.
very much more informed apparently than you. Okay, first
I
of all, you
guess if you
said
say so.
retail can't, you just said retail can't trade on dark pools. We can trade on
Retail
dark pools.
retail does not place orders or trade there through dark pools. We don't get to choose where our shit goes. Plain
Dude,
and
on
simple. It
Fidelity,
goes to the
I'm
alternative
looking
trading
at a
system.
dark pool routing right now. Yes, retail can trade on dark pools. You were wrong. 100%, without a doubt,
All
you
right.
are
You're looking at
100% wrong.
semantics here. You're looking at semantics here. When you
I'm
place an
looking at
order, unless
facts. You're
you have to
making things
route
up.
your order. You have to
Dude,
route your order
semantics.
specifically. There's semantics here. We can't go over there and be like, okay, I'm going to buy 1 million shares on the dark pool from this person at this price. But
Yes, you
institutions
can.
can. Institutions
Yes.
can.
Retail's,
You can't buy 1 million shares from me. You can buy them on any exchange, whether it's a lit market or a dark pool. But you can't buy them from me. But an institution can do that on a dark pool.
I mean, yeah, there are private only dark pools that some people like
Exactly.
choose to match
Yes.
on.
You just said yes. You want to pretend like I don't know what I'm talking about here, but the matter
You
of
don't
fact
know
is
what you're talking about.
you
You
just
just said
agreed with me.
You just said dark pool can't trade on dark pools. You just said that.
Okay, let's put it this way. Retail can trade on dark pools, but they can't choose who or what price exactly at the same time. So even though we can choose our price, I can't say I want to buy 1 million shares of this for this price from Matt Kors. I can buy them, but they'll go through whoever the hell they want. They'll go through whatever dark pool or alternative trading system that they want. And we don't get to decide who we buy them from, where institutions can, period.
In a private dark pool, that
Exactly.
scenario might exist.
Exactly. And there's a shitload of private dark pools, right? The fact of the matter is that dark pools suppress price action.
How many
Period.
dark pools do you think that there are?
There are a lot of dark pools.
Yeah, no, how many? Like obviously you've studied this quite a bit and you've talked to a lot of experts. Give me a roundabout number.
There are a ton of dark pools.
Yeah, no, how many? So like a ton, like 2,000? Like
there are hundreds of dark pools.
You think there's hundreds of dark pools?
I know there are hundreds of dark pools.
You know there's hundreds of dark
pools.
Yes,
absolutely.
As you knew that retail couldn't trade on dark pools.
Retail can't trade on dark pools directly from another investor.
What?
You can't buy as a retail directly from another retailer on a dark pool the way that an institution can buy from another institution on a dark pool. A lot of these broker dealers have their own alternative trading systems, a lot of them. And then there are a lot of dark pools as well that they can also trade in.
What does that have to do with any of this?
The fact is that it proves my point here. A dark pool institution can purchase shares from another institution on a dark pool or an alternative trading system. Retail cannot purchase directly from another retailer or institution on another dark pool. You don't get to choose who you buy it from.
Well,
whereas institutions can.
They just set it up.
Yes,
where,
they can.
They know that there's another play. But we're getting off the point. This has like nothing to do with the point of this conversation. Besides, dark pools have a material impact on price. We know how many was traded on them. We know the price that the trade went through at. That is all available. The only thing that a dark pool has opaque about it is sitting buy orders and sitting sell orders that are not fulfilled. That is the only thing that occurs on a dark pool that is not publicly available. That's why it's called a dark pool. Whatever you're talking about of shares like sitting there for a little bit, that sounds like a made-up boogeyman story. Every single trade in the US market is on a T2 settlement system. It does not matter if it's on a lit exchange. It doesn't matter if it's on a dark pool. It doesn't matter if it's with an internalizer. Every single trade is on a T2 system for settlement.
Shares in a dark pool can be held for up to 28 days, I believe it is, before they're actually pushed through onto the market. They can pick and choose when they want to push these shares through onto the market. They don't have to go through the moment that you put an order in, period.
What do you mean to the market?
You really don't know that? That's sad, man. That's sad. I can't believe it. It does make perfect sense. You're just not educated enough to understand that. Dude, that I can't help you with. But the fact of the matter is, let's go back to it. Let's go back to it.
Oh my God.
The fact of the matter is, it says here that upon the occurrence of a reorganization event prior to the conversion date, each share of preferred stock outstanding immediately prior to, with any consolidation, merger, or conversion of the corporation, in each case pursuant, the common stock to which the common stock will be converted into cash, securities, or other property. Any sale, transfer, lease, or conveyance to another person of all or substantially of all of the consolidated assets of the corporation and subsidiaries taken as a whole, in each case will be converted into cash, securities, or other common stock. So the fact of the matter is, any buyout, merger, or reorganization of the company whatsoever will lead to a recall because the reorganization event would cause that.
Make that jump right there. Like, it will lead to
a jump.
recall.
It is a recall. That's what it says right there. It says it right there on section 7.
Does it say the word recall?
It says automatically convert.
Yes or no?
Do you know what automatically convert means, Matt? Like, are you smart enough to understand that? Automatically convert into the types and amounts.
It doesn't mean it converts to AMC.
You're right. It converts into whatever. So if Disney buys out AMC, then those APE shares would automatically convert. APE shares would automatically convert into Disney. Therefore, shorts would have to close their positions on APE. That's it, man. There's nothing else to it.
You're changing your argument. Before you started.
No, I'm not. That's exactly what I've been saying this whole time. Whole time.
Your thesis was that APE would get recalled into AMC and thus force the shorts to cover. That's what you said.
Yeah, there are multiple ways, whether it's a consolidation or a merger or a conversion. Whether it's a consolidation, then they would be recalled into AMC. If there's a merger, they could be recalled into Disney. If there's another merger from AMC merging with Odeon, then APE could be converted back in AMC if they end up being the parent company. That's it. Those are facts. Right there, page 13 of the AMC preferred equity unit dividend on the SEC filing. Page 13, section 7, adjustments. Says it clear as day. You don't got to be an attorney to figure it out.
Dude, this is from the same person who thought that Adam Aaron and the leadership team could just push APE back into AMC if they wanted. So
because I wasn't looking at the filing at the very moment, which I am, by the way, and I admitted, okay, you're right. So they would be able to, convert it back in AMC. All they would have to do is run it through retail for a vote. Yeah, that's not so hard.
Okay.
In addition, it says here, you don't need to go look it up, but if you want to, it's on page 13 right there, clear as day, section 7 adjustments.
All right, I vehemently disagree with you, but let's say you're right. Just to move this forward,
I am right. It says it right there. On section 7, page 13.
It's going to be recalled into AMC.
You're right. It says automatically convert. Do you know what automatically convert means? Do you want me to get a dictionary and a thesaurus out for you?
Or into the stock that it is like broke, whatever the deal is.
Exactly. And if APE is converted into Disney, then automatically APE would cease to exist, right? There are over 50 dark pools in the United States, right, alone, not even counting alternative trading systems. They're all dark pools. An alternative trading system is a dark pool, right? There are hundreds of them.
Literally, ATS means dark pool. That's just like the colloquial name for it.
Exactly. There are hundreds of dark pools available, right? And 50 dark pools alone, not including alternative trading systems, just in the United States.
Make this? Weren't you just talking about it getting merged into Disney? What kind of jump did you just make?
What do you mean? We're talking about dark pools and AMC and APE and anything. It doesn't have to be Disney, okay? There's anything that it could be merged.
Okay.
If AMC merges with Odeon, which is one of their subsidiaries, a reorganization would quote, automatically convert into the types and amounts of securities. And if a conversion occurs, then therefore a conversion of the stock of APE and a delisting of APE would cause the shorts to have to close their positions. They wouldn't just be able to roll their shorts into another stock.
My whole issue with this is that you said APE could get recalled into AMC. That's not going to happen. Could it get transformed into Disney or?
Why not? It says right there. Upon the occurrence of reorganization event prior to the conversion date, they would automatically convert into the types and amounts of securities. So it could happen into anything. They could automatically convert them into Disney. They could automatically convert them into AMC. They could automatically convert them into Odeon or any other sort of lease or conveyance.
It would not.
Yes, they can.
No,
if AMC is the parent company and they decide to merge with Odeon, for example, then all of a sudden AMC is the parent company. Odeon shares and APE shares would convert into AMC. That's a recall, my friend.
No, it isn't.
All right, we're going to have to agree to disagree. All right, okay, yeah, it's on the 8K, page 13, everybody. Go read it for yourself, section 7. Have a great day, Matt. I'm done with your ignorance. Have a great day, my friend.
You're literally just going to drop now? All right, well, a little bit of a bitch move, if you ask me. I don't know. The guy doesn't know what hedging is. The guy doesn't know what dark pools are for. He really didn't know what hedging was? Like, that's insane, right? Like, am I crazy? 2 decades of fucking trading and you don't know what hedging is? Yeah, I hedge my calls by buying stock. Dude, that motherfucker got that play out of Sam Bankman-Fried's book. Yo, Sam, how'd you hedge Almeida? Yeah, I went fucking balls deep into FTD. Like, come on, man. 2 decades? What a fucking liar, man. Dude, and Oh my God. This is so frustrating. And it's like a fucking tightrope we're walking here. The retail movement, in my opinion and my estimation, is one of the coolest things that has ever happened. The average fucker who's just barely getting by on minimum wage, enough of us came together to actually make a difference. Like, and to me, that is so cool. And this might be ideological. I'm fucking 28. Maybe I just don't know what I don't know. Maybe I'm a little bit too naive. But then we have people who come in and they just fuck it all up. This hopium and this copium is so insanely fucking toxic for everyone. It is so, this is a quantitative thing. This is not a game of emotions of I believe this will happen. Oh, I read this one word and I interpret it this way, so it has to work out. The market gives zero fucks. That's how many fucks it gives in absolute total. This is a game of math. This isn't a game of we fucking got together and circle jerked on a goddamn Twitter space call. That's not how you make money in the fucking market. At one point, it's